Hello, welcome. Today is the 18th of February 2020. It's 15:18 local time. This is the euro dollar on an hour chart. I thought I'd make this quick video as a little follow-up to the last video I made where I basically went through all the markets. This is euro dollar trading at 1.0787. So I talked about it in the last video and the scenario I described happened. So the dumb money kept on buying euro dollar in the last days. So as I said, they're going for the low once more. They took out two big medium-term stops today. Here's a third one, as you can see, and loads of short-term stops. So since no shorties are entering the market and longies try to enter cheaply, another failed reversal was the result of that kind of market activity. So that once more demonstrates what's going on. As you can see, as long as dumb money just keeps on buying, smart money keeps on pushing down. That was a big move overall. Let me zoom out. As you can see, this was a big down move in euro dollar against all these down and long accumulations, and then after a little consolidation, breaking and going for the stops, because that's the only logical move the smart money can place, really. You see, there's no reason for the smart money to move the price up because there are no shorties in the market who they need to hunt. So there's no need to normalize. So they will basically, finish up the business and clean out. And then once that has been done, then basically, there is a chance that some long-term dumb money short traders get triggered by, if they have placed sell stops below historical lows, for example, which can sometimes happen. These tend to be traders trying to trade fundamentals, etc. In that case, it would then make a normalized move up like a grip, but as long as the market structure doesn't change, they're just going for it. That's the reason why you see those exaggerated moves in the foreign exchange markets, which don't really make sense in terms of fundamentals or technicals or anything else. And the reason being that, this is like a dumb money squeeze, as I've shown in the last video. So if, of course, there would have been big red bars here in the last days, they would have gone up. But as you can see, nobody on the dumb money side can be motivated to sell this market. Obviously, selling it would be an expensive entry as well. And that's the reason why they just go crazy on that market, the biggest market in the world. I think I made my point here. The people follow me, they saw that I posted lots of scalp trades as well. All have worked out so far. Something I said I would do. So yeah, but rather than doing all that, I should actually focus on finishing a new project, which I will do. And once it has been done, I make a longer post and explain all the things which are coming. Okay, so as you can see, price is going for these short-term stops. Good chance I go for this medium-term stop as well, or even undershoot in that case. We don't have major scheduled news today, but that's not even necessary. They don't need any economic plausibility to do moves like this, because people know that in theory these moves are possible. And funny enough, around the world, if you switch on the news channels and analysts, so-called experts, they will tell you all kinds of reasons why euro dollar is going down, why the dollar is gaining strength and whatnot. Why the reality is that the dumb money is just buying the market, and the smart money entities see that push down and go for their stops. Or the ones who do not have orders push them to margin calls. So naturally, after those levels have been taken, at some point all these dumb money traders will reduce, because many of them get kicked out one way or another. And somebody asked, yeah, what about flash crash and all that? Well, of course, we have seen flash crash in markets such as dollar yen or pound yen or cable as well. So, and of course, a big Swissy one. Now, would it be theoretically possible that also major markets like euro dollar, Australian dollar, dollar cut would be subject to so-called flash crashes, which are just exaggerated stop runs? Absolutely. My opinion on this is yeah. You know, like why not? Nothing would happen because nobody understands what's going on. You see, the people who watch this here, they are a small minority. So basically, yeah, absolutely. Why not? They could do or could do a big fish move. They've done it in the past. You know, an exaggerated like pin to just clean. So yeah, absolutely. I mean, so whatever I do in the markets, always assume the price could do anything. Okay, could do crazy moves in any direction. So you know, always keep that in mind. And as you know, I'm also a big fan of Nassim Taleb's work on black swans and fat tail moves and all that. Yeah, I mean, you know, this is like a nice description of the market realities. And of course, I also draw your attention to Mandelbrot's work on fractal markets, multifractality. You have volatility clustering, long-term memory, fat tail moves. All that is financial turbulence, beautifully described in mathematical terms, as well as you know, with good examples and all that. So these are the realities of the market. So yeah, I thought it would be a good idea to just quickly do this video because it blends nicely into what was said in the last one, and there's no better way of demonstrating all these principles than actually being aware and watching all that what I'm showing. So yeah, I'm allergic against anyone mentioning supply and demand because that implies that they don't even have a clue about the basic structure of the market. You know, foreign exchange is not primarily driven by supply and demand, as you can see here. So you know, keep that in mind. And as you will see, as I've shown countless times by now, also when major targets get hit, the price exactly turns there. You know, so it's basically business as usual here. In that case, with that dumb money squeeze, they went for historical targets. And as you can see, they still have appetite right now. So I'm nibbling on the next ones. Yeah, just quickly showing, maybe since I'm here, quickly showing pound dollar. Look at that, price went exactly to the empty and returns to the range. There's a much lower bias, of course, but boom, this is a classical medium-term stop run and a grail pattern. You see, this is a typical grail pattern where, you know, stops accumulating at those kind of plateaus, as I call them, are targeted. So this stuff is going on all day basically. Sometimes bias is low, sometimes the bias is high. Let me also show you this one since I'm here. So of course, pairs who have their own stops, like here EG, look, they go for their own short-term stops, you see. And then they, again, as I explained last time, they can show, oh, we are correlated. EG is correlated to euro dollar, so that shouldn't be surprising. Same as Aussie, which took, and of course, for example, dollar yen, which is traditionally negatively correlated. Let me show you. Oh, look at that. So they use that to go up and take out those medium-term stops, the yellow lines, right now here in front of your eyes. You see? So suddenly the correlation between euro dollar and dollar yen becomes negative again, like it's often. Why? Because while euro dollar cleans out all these dummy longies, dollar yen goes for the shorties and their medium-term stops at the high. Boom, boom. To taken, they will disappear soon, and they can of course, you know, overshoot and all that stuff. So that once more shows what I explained last time about correlations. Oh yeah, that correlations depend on the market structure, without question. Yeah, I always get a bit amused when people, you know, come up and present approaches, you know, like they create those, for example, a matrix showing currency pairs and the values and which one's the strongest and which one is the weakest, and this is completely unstable, you know. If it works for some time, it will afterwards completely change. So I'm very skeptical towards those kinds of systems or approaches people promote, because for obvious reasons. Yeah, it may change in an instant if the dumb money decides that, you know, it goes on one side in this market and on the other in the other market, or there's a big stop accumulation which they want to take, yeah, and momentum, so to speak, in one market. So the one market was more momentum, it basically is a higher bias, as simple as that. I also show you quickly Australian dollar. Yeah, because so that's another example. So here they, you know, sometimes the Australian dollar, Kiwi dollar, they kind of front run euro dollar, and here you could see that the same, that, you know, that Australian dollar started the down move against the dummy long, is taking out loads of empty stops which now have disappeared. So that looks to the outsider like a positive correlation between the Aussie and the euro dollar. Yeah. Let's just also measure what we're talking over here. So just the last breakout was like a 40 pip move. But of course, if I go from the high, we call it about 300 pips since the squeeze, that's a lot for euro dollar. And just from the high of the 15th to the low from today, we're talking about 138, 139 pips. So that's a lot, especially after euro dollar, as I've shown in the last videos, in the long term was a long-term downtrend. So that's basically the finishing move. Okay, but as you can see, the money kind of stops buying. You know, most of these guys, look, they're all into loss here. You see, these guys here, these ones on the y-axis, they bought here, here, here. They are already all in drawdown, and some of these guys' accounts get blown, some of these stops get taken. You see, so now there's still long activity, but it's fading. Of course, some of the longies try to average down, which is a bad idea. You know, they try to buy again, trying to have a better average price. But that, as a general rule, is not a great idea unless it's like a precise component of a very, very tightly defined strategy. But that's a topic which should be covered somewhere else in another video, I guess. Quickly, just showing you as well. No, it was a bit too late, but you can actually see it on the threads and the screenshot. So dollar cut, it took a nice short-term stop here and now came back into the range. Yeah, so went up against the shorties. So the same thing, dollar cut is traditionally negatively correlated with euro dollar. So because euro dollar went against the longies, dollar cut went for the shorties and took out all these stops here. There was a nice short-term stop which is now gone, and therefore they fall back into the range. And of course, if today, look, today is Tuesday. If it would be Friday and the market closed, they could easily, you know, do a gap down and finish off. We know those games, in those situations where they would gap against the dumb money but not gap in favor of it. I've explained it in another video as well. Okay, I think that concludes it nicely. I wish you all the best. Stay safe. You know, do not just start trading without being prepared. I say it again one last time. Do not show up with a knife to a gunfight, as they say. You know, you have no chance. Don't try to just, you know, trade some indicator which may look good visually but actually doesn't perform over a period. I think that's the topic I should demonstrate once in the future. Do not just, you know, trade fundamentals or technicals, or, you know, and above all, always, you know, have some kind of risk management in place. Okay, be please very aware of your risk management. There can be crazy moves which do not seem to make any sense from your perspective. Be prepared for that, you know, so do not over leverage. Okay, always be prepared for what's happening if prices move against you. This is part of the game in FX. Prices will eventually move against you. Sometimes they will never come back again. You see, so this is something which can completely destroy your account, your trading. So be aware of that. Okay. The smart money knows all that. The smart money exploits also human psychology and human emotions. Yeah, that people don't like to take losses and they like to take gains, but they tend to let their losers run without a precise plan in place. So as you can see, those longies, they say, oh, maybe hold over and all that. They know that. They've measured that very precisely, and they know at which point the average dumb money trader will do what. Okay. And last but not least, yeah, of course, on the dumb money side, retail traders are a very, very small percentage. These are not retail speculators. But of course, retail speculators tend to be on the wrong side. You understand? So that topic I've covered in another video nicely, as we know. Okay, so I've shown some markets here quickly. I think I made my point. Stay safe. All the best to you. Bye.